Hello and welcome to Moneylife. This is Sucheta Dalal. This week we are going to talk about Rajesh Exports, primarily because many of you posted comments on my last video blog saying, why don't you talk about Rajesh Exports? Now, the funny thing is, all of you who want to know about Rajesh Exports have actually read the SEBI order, or at least have read the headlines, have read all the noise in media, have read opposition parties demanding an investigation, and the numbers are indeed amazing. In fact, on 3rd June 2026, the Securities and Exchange Board of India dropped what I call a 109-page bombshell on the markets. In an interim order against the Bangalore based Rajesh Exports Limited, and indeed some of you may say, what is that? Which is this company? But you will sit up when you hear the alleged financial misrepresentation. It was a breathtaking 15.15 lakh crore, according to SEBI. Now, this is a company promoted by one Mr. Rajesh Mehta, who is its chairman. He's been barred from the securities market, and on that day, the stock hit the 5% lower circuit and continued to do so over the next 3 days. What was the price? Just about 100 rupees. So, not a big deal. The number was phenomenal, 15.15 lakh crore. Now, although SEBI barred Mr. Mehta from the market, ordered a fresh forensic audit, the man himself appears completely nonchalant. He told the media, this is an interim order, nothing in it is true, and we are in the process of studying it and will prepare a response. A more detailed response to stock exchanges spoke about confusion on the part of the regulator and a communication gap. Frankly, if the Securities and Exchange Board of India has dropped this kind of bombshell out of confusion and communication gap and made such a huge allegation, you need to shut down SEBI itself. So let's not go into that. The charge that it is confusion itself is so scandalous and has many ramifications. But in another media interview, Mr. Mehta also made the astounding claim that they had sent copious data running into 300 to 400 gigabytes to SEBI, and SEBI was unable to locate all of it, and that is why it's now being resubmitted. SEBI, on the other hand, has said that despite asking questions repeatedly, the promoter had refused to answer. Now, perhaps Mr. Mehta has reason to be confident. After all, we, the people, on the other hand, would be foolish to hold our breath and expect something major to happen. It's been a few days. As you would notice, nothing has happened. There was a huge noise for 2 days. Every influencer looking for a story has immediately become an investigative journalist and put out a video. But has anything happened? Have any of the major investigation agencies followed it up? SEBI's hard hitting interim order has to hold up in appeal, and it can be decimated in procedural battles. They will find holes in the investigation, contradictory statements, and things in the order itself written by their own people, which can be ripped apart by very smart lawyers employed by the other side. Am I making this up? Now let's go step by step. Okay, let's look at the 15 lakh crore question. SEBI's findings started after a shareholder complaint. Rather late, we'll come to that. The findings are stunning. It says that Rajesh Exports reported consolidated revenues of roughly 2.8 lakh crore in the calendar year 2023. Nearly 99% of this is attributed to its Swiss subsidiary, Valcambi SA. This is a globally recognized gold refinery. But Valcambi's own standalone audited revenue for that year was just 542 crore. So the gap is astounding. The company claimed that Valcambi only recognized processing income, but gross gold transaction values were being counted at the group level by SEBI when it put out this number. The problem, says SEBI, is the company is not been able to support this claim with any documentary evidence despite repeated summons. Now, Mr. Mehta has said 300 to 400 gigabytes of data have been supplied and SEBI can't find it. Maybe the courts or appellate bodies will know who's telling the truth, but at the moment, it is almost like SEBI is just another person, another influencer making a video and making allegations. That is the attitude of Rajesh Exports. SEBI also found Rajesh Exports guilty of routing company funds through promoter linked accounts, subsidiaries with little or no operations, making adjustments to trade receivables that are not adequately explained, and diversion of funds to promoter entities for derivatives trading and other investments like a battery venture, which is again supported by the government. These questions about Rajesh Exports operations, strangely enough, are not new. So, why it seems like a big bombshell of in 2026? The reason why we're not so impressed is that in 2014, Moneylife published an article questioning the company's accounting practices. That is the time that regulators and investigation agencies should have woken up. They didn't bother. Opposition parties and influencers are also doing it now. Okay, despite SEBI's huge disclosure, to my mind, the real question is a 12-year silence. Things have happened since 2014 as well. It's not that we were silent. In fact, Moneylife's editor, Devashish Basu, has repeatedly put out media posts, and here are some of them, about how Rajesh Exports was seen as kosher and even inducted into the NSE 200 in 2016, when it replaced the oil giant ONGC. It remained in the NSE 200 until 2019. All these were red flags. Was the exchange looking? Was the regulator looking? No. Why not? We don't know. Instead, Rajesh Exports was signing deals. It signed up with Telangana for a high tech products uh, company, which was again tweeted by the then minister. None of this attracted any scrutiny at all. But smart money invested in the market was certainly paying attention. So think of how the stock has moved. And this is what you as investors should pay attention to. The Rajesh export stock reached its high of 1028 in February 2023, 3 years ago. So all this hype continued till then. At the time of SEBI's bombshell, it was already trading at one tenth of the price, just above 100, right? Now, in 2023, there's a group called Beat the Street, which published a long X thread raising questions about gaps in the audit and other issues with Rajesh Exports, which we had published as an article in 2023. So, another big red flag and siren out there. No, but SEBI didn't look at it. SEBI apparently waited for someone to complain the next year because though it is supposed to be monitoring everything that's put out in the market, though it has got AI systems and red flags for the last 15 years or more, nothing was caught. So it started investigating apparently only in 2024. So the real questions to my mind are not the alarming findings of the regulator, which it should have known 10 to 12 years ago, which serious investors already know. They voted with their feet. The stock price is a tenth at what it was in 2023. But the bigger question is this is an interim order. I keep saying, will the regulator follow with a quick final order? When will this forensic audit get over? When will these 300, 400 gigabytes of data be looked at? Will that happen in the foreseeable future? Will there be any follow up action by central agencies, enforcement, CBI, which is putting out arrests every day about finding black money and corruption? Now, there's a separate report which again tells you all should have been known, which is put out by the Daily Pioneer. The Pioneer points out that Rajesh Exports has been listed as a defaulter by Canara Bank and owes it 2,458 crore. The bank should have filed a complaint with the CBI, which the paper says it hasn't done as yet. Why? All these are question marks. In addition to this, the insurance BMIC, Life Insurance Corporation, also is sleeping, has ignored all these red flags and holds a 10.8% stake in REL. Now, you may say that's a faction, but it's got an investment committee, which has been controversial since the 1950s during Nehru's time. But it's not reading anything, it's not following, not looking at it. Why, like investors, is it not voting it with its feet? This cannot happen out of ignorance and lethargy. None of my questions are speculative. They are based on SEBI's recent history and track record in high profile cases. Why am I saying, will it be followed up? Remember Jane Street? In July 2025, SEBI issued an equally big interim order on Jane Street Group. This is one of Wall Street's globally most secretive and most profitable trading companies, followed by investors around the world. SEBI accused it of systematic manipulation of India's Bank Nifty and Nifty 50 indices on options expiry day. Now, I'm not saying SEBI's findings are not correct. SEBI asked for a disgorgement of 4,843 crore of Jane Street's net profit from India. This is a small sum which it promptly paid out. Now, the Jane Street order was again interim. It attracted global coverage. Regulators around the world sat up. 1 year later, zero action, complete silence, no final order. In fact, we're beginning to wonder whether it will actually be appealed or it will end up in a settlement after dragging on for years. Because after saying we deny it, Jane Street is in no hurry, it's paid that money, SEBI is in no hurry, there's no final order. So, big bombshell, zero action, a whole year. Then the Reliance order recently, many of you may or may not have followed it, but this is an 18-year-old case where SEBI accused Reliance of fraud and market manipulation. The whole issue goes back to 2007. This has gone all the way to the Supreme Court, and last week, the Supreme Court issued a very significant judgment. It not only quashed SEBI's 447 crore disgorgement order against Reliance, it directed SEBI to refund 250 crore that Reliance had already deposited in protest while it was appealing the order. All it held up is a 25 crore penalty for regulatory violations. Now, what did the Supreme Court say? And this is important because it's going to apply to a lot of SEBI orders, because SEBI has followed the same formula of looking at technical faults and saying it's fraud without looking at anything else. So, SEBI accused Reliance of benefiting from arbitrage between cash and futures markets, saying it operated through 12 affiliated entities. The Supreme Court said that although Reliance and its affiliated entities may have breached concentration or position limits, which was the crux of SEBI's argument, SEBI could not automatically say that it was fraud without proving an intent to deceive and actual manipulation. It could just happen, they say. Well, mens rea, intention is what the Supreme Court has brought in, and that will apply. And there are many cases where SEBI has humiliated people and things have been thrown out because it's acted in haste, looked at even insider trading, where shares have been sold because they needed to pay back creditors. SEBI has held it as insider trading and lost. So this hopefully will force the regulator to be more careful. But again, huge case, huge company. Reliance is one of the biggest companies, and it ends with a whimper after 18 years. Then again, there's the National Stock Exchange issue, the colocation scandal, which I had first exposed in 2015. We had a defamation case of 100 crore. It's only after that succeeded that SEBI began a serious investigation. It led to a complete overhaul of the management, which had been there for 23 years. And yet, all of this ended in an incomplete and botched investigation. Multiple show cause notices, multiple orders, some of them undermined by gratuitous remarks by SEBI's own whole time members, not able to connect the dots, not daring to cross examine properly or investigate properly. Some of them are still half done. This is a case that pertained to preferential access to NSE's co-location terminals housed within the exchange to select brokers. When the investigation began, all kinds of other things, including capricious decisions by the entrenched management, came to the surface. That's what led to a change of management, led to 7 forensic audits, all of which came up with something or the other to show wrongdoing, while SEBI had been sleeping for decades and allowing the management to do what it pleased with a fully captured board and captured regulator. In June 2025, NSE, under its present management, has said enough. Let's put an end to it. Let's go ahead with that IPO that we want to make, which will be one of India's biggest IPOs. So it's offered a fat settlement. It offered over 1,000 crore. But SEBI's high power committee apparently wants 1,880 crore. Now, NSE is so obscenely profitable that it's most likely to pay it up because it will close all show cause notices, orders, proceedings. Pending investigations will also be buried. Lots of people are going to get away. And that is how SEBI's investigations end. Remember 2015, this is already 11 years. The IPO has been held up for a decade, and it's all going to be cleared because SEBI also wants a closure. NSE wants a closure. There's a new management, and people are forgetting history. In fact, those who ought to be investigating or who were sleeping have long retired even from SEBI. These are just a few of the big cases where SEBI actually initiated action. There are others where there have been serious frauds investigation office reports which we have given to SEBI and nothing has happened. The more worrying issue, to my mind, and this should concern investors, is the complete erosion that all this indicates in any deterrence. Because you want to close wrongdoing because you cannot investigate and complete investigations thoroughly in a manner that hold up. This is also being blessed, not just under the SEBI Act, but under the Bankruptcy Act, also being blessed by the Supreme Court itself. In a recent case, it not only allowed a set of promoters who are making plenty of money abroad in the oil industry to settle at a fraction of what they owe, waive interest, and wipe all civil and criminal charges clean. Now, Anil Ambani also wants the same treatment and has written to the finance ministry. So, my question is, you investigate for what? Because you want a bombshell? Because you want someone to resign? Ministers don't resign in India anymore. You want action? It happens only when directed from the centers, which because it's a SEBI report, nothing is likely to happen. This is the backdrop in which you, as an investor, have to look at SEBI's June 3rd order. So, what should you expect? Long drawn battle whose contours are already evident in statements of Rajesh Mehta, misunderstood, confusion, misunderstanding. Smart investors have dumped their shares the last 3 years. The Reliance judgment is a precedent of how things may move. You have to prove mens rea even here. Even if there are mistakes, it has to be proved that it was done intentionally and to manipulate. God knows how that's going to stand up. LIC has not even been questioned. One media report says the only tiny bit of action is the Ministry of Heavy Industries may remove REL from the list of beneficiaries under production linked incentives for a battery manufacturing subsidiary after the SEBI interim order. So, an impressive interim order has little meaning unless SEBI is able to produce final orders that hold up in court and lead to proper enforcement action that has a serious deterrent impact rather than settlements. Or High Court and Supreme Court orders that are not embarrassing, where you have to return money that you have disgorged in the past. Until that happens, you, the investor, are on your own. You need to study balance sheets, you need to track social media, you need to make your own decisions without waiting for the regulator to tell you what is wrong. Don't get so excited because a regulator may be telling you things which are 10 years or 12 years too old. Watch the market. The market usually knows before anyone else. In Rajesh Exports, it has known for 10 years, as indicated by the stock price. That does not necessarily mean there'll be any enforcement action, but at least your money will be safe. If you agree, subscribe and share. Don't get too excited. Thank you.